Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris Forsick from Elite Currency. Before we head off to euro dollar, I wanted to make you aware of a special sponsorship from OneFX Broker for ECS Live for free for 6 months. So yeah, if you're from one of these countries, definitely check out this special offer from them. All right, now off to the euro dollar. As we indicated on Monday, the 1 hour chart was the primary important chart here, indicating a potential 5-wave pattern. We had a wave 1 already here, then a wave 2, 3, and we were looking for a flag followed by a wave 5 to the upside, and that's indeed what happened. So nice move to 121, and passing that, even going up to close to 121.50, so the target easily hit, and going beyond that actually. So nice move for the euro dollar there, and still could see one more push up. Let's take a look at the 15-minute chart. All right, here we have, as you can see, a double divergence present on the 15-minute chart, and with divergence specifically double on lower time frames. Single is enough on higher time frames, like 4-hour chart or higher. 1 hour is a bit in between. The 144 EMA is the main target of that divergence. So expecting price to break below the 20 EMA and make a small little retracement here of about 20-30 pips back to the 144 EMA zone, anywhere between 144 and 233 EMA. It can overshoot the 144 EMA zone a little, so it's just a rough indication. But with this spike up to the 121.50 and the minus 100 pip target, it is looking like, and the double divergence is looking like price can make a retracement back to the previous wave 4 probably as well in the moving average zone. I'm suspecting some type of ABC pattern, so I think that there will be still a bounce up for the wave B, and then a move down for wave C, and then a bounce up again for one more push higher. It's potential. Of course, 15-minute chart is always a little bit riskier, but I think that is likely at this moment from 121 to maybe 121.50 or 121.75, the WIS6 level. Now, if price, however, breaks through the 121 zone, let's take a look at the 50-minute chart again. Then, of course, it might be that the wave 5 is finished. Let's go back. All right, so yeah, if this zone is very important, of course, right here, price needs to bounce in that area, because if it doesn't, then it could also indicate the end of the wave 5 already, that just was the end, that's it. And 1, 2, 3, 4, 5 finished, and now we're looking at an ABC pattern down. So if price breaks through this particular support zone, then it could indicate that the wave 5 is finished, and we're looking, for a move down. I'm leaning towards one more push up, but if this is the wave 5 of wave 5, it's a little bit tricky. You can still get one more push up. It doesn't have to be, right? So I think it's I would say it's maybe like a 65-35 for one more push higher, but it's not more than that, I think. Let's put the fib on the entire swing. All right, because if we get the ABC down, then we would expect price to go to the 38.2 fib, bounce, and then go down to the 61 or 50 fib, and then bounce back up again. Because that ABC, the bearish ABC pattern like this, would complete a bigger, probably bullish ABC. And for those that saw the video on Monday, you know that I'm looking for a bullish ABC pattern here. Why? Very quickly, because of the fact, let's get rid of this fib here. Hang on, folks. There we go. And well, basically, because if you look at the higher time frames here, this looks like an ABC down, looking for an ABC up, and then probably a 5-wave down again, or a down, up, and down as a triangle pattern. Okay, so one of those two patterns is the most likely one. So looking for down and up as a wave B, and then down again. That's the bigger picture there, as there's a retracement basically taking place within the larger uptrend. And I do think that the uptrend for the moment, it will continue later this year, this first quarter perhaps. So that's it for now. As you can see, looking for small dip and up, and then ABC down, and then 5 waves basically up again towards 122.50-ish, even 123.25-ish, depending whether on the larger wave patterns as well. Any of those targets is possible. So don't think I have much to add. Than that. Let's see here on the wave 5. It looks like, yeah, it looks like a 5-wave, as I said, 5-wave pattern could be completed, but it also could be a wave 3, 4, 5 like that. So both our variations are possible in my view. And that's it. Let's take a look at the pound USD. I don't think I have anything to add. Pound USD. Oh yeah, by the way, of course, one advantage of the SWAT course is that you have the SWAT candles, fractals, and such, and indicators to make everything a little bit easier. So as you can see, you know, from this perspective here, great shorts for the wave when we get red candles for the wave C, and the blue candles indicating the counter trend trade here for the beginning of wave A. So you know, of course, you need to know what the wave count is and the direction so that you don't trade these to the upside. But yeah, if you have that in mind, it certainly helps with identifying entries. Here too with the pound USD, as you can see, entry available with the SWAT candles here and here. And we had some great feedback on the SWAT course in general. All right, so small promo for my own course there. I hope you don't mind. But with the pound USD, I also was bullish. Remember on Monday, that was back, let's see, no, it was Sunday evening actually, before the market opened, excuse me, which was, where was that? Very quickly, sorry folks, here. So yeah, we got the retracement and a bounce up, bounce at the 144 EMA nicely, and a continuation higher towards the 138.60. That was the first target. We came just a few pips there, 138.56. Target hit basically in my view. Even if it's right here, it's just 138.50 is a great target. This could be a bouncing spot. I think it could go further than that, but certainly a heavy resistance spot because of the WIS 7 and the minus 61.8 target. So I do expect a retracement here. I would not look for long setups in this spot. Obviously, I don't know. I'm not a fortune teller. I'm not, you know, the market might just blast through this level, but I wouldn't count on it. And we certainly wouldn't take any trades in here to the upside. Now, downside, I don't know. It is possible for a reversal trade on lower time frames, maybe smaller 50, 75 pip, but I wouldn't expect much more because it's very possible, I would say, maybe again 65 and 35 here, that there's a flag going to be emerging and then a continuation higher towards WIS 8. Now that push towards WIS 8 could become choppier. The momentum could fade and we might settle in some kind of channel like this. And how far that channel goes really depends a little bit on how much momentum there is. But ultimately, it could reach 140, the psychological round level WIS 8 and the minus 161.8 target. And there, I would certainly expect an aggressive move down. And that, in my view, is very likely, you know, I would say 80-20 or even 90-10. That would be a substantial push lower in terms of, I would say, 100 pips at least, if not more. So yeah, if it gets there, of course, but that seems likely at this moment. So, but this expecting a small retracement. As long as price respects the 21 EMA zone plus minus, I do expect price to continue higher and bounce there. This is just too much momentum pushing away from the 21 EMA. Way different, as you can see. Look at this reaction here to the 20 EMA compared to this, right? Totally different environment now. We're in an impulse and a trend in my view, and 20 EMA, if price gets back there, should see a bounce. Maybe not as quick as this one because of the flag pattern, but I'm expecting a continuation higher. So let's put the fib maybe, instead of using this one, like this. Yeah, 38, 137.90, 20, even 23.6 fib, maybe 138. I think 38.2 fib since it was likely, maybe even to 50. Somewhere in there, those three fibs, but 38, the main one, and continuation higher. So we are getting a break. Yeah, we had to the upside, we had the rising wedge, but the rising wedge was a factor, but then we got the bounce, and then it turned more into a sideways movement, and a breakout to the upside was expected. That was what we said on Monday or Sunday, and indeed that taking place with good daily candles pushing through. So I think that the bulls will keep control and push towards 140 later this week, maybe beginning of next week. That's it for now. Once again, check out the special sponsorship offer from Monfex Broker or my SWAT course as well, of course, if you like my analysis or want to learn from my course. It has 22 videos with 70 videos with 22 hours, excuse me. Also strategies and all the tools included. And yeah, if you have some spare time and you want to write a review on Forex Peace Army or Trustpilot about Elite Currency or me, certainly would appreciate that. So you can find Elite Currency on both. Thanks again, and we'll see you next week. Cheers. Bye-bye.